All right, here goes nothing. I've done a lot of spaces in the past. I've done a few public videos alone I've put out to Twitter, but trying out a new format today. Going to do a bit of screen sharing as well as a monologue. Today I'm going to go over my broad thesis. I guess we can consider this episode 1. Don't have a YouTube, so I'm just going to publish to X. Thinking about a YouTube, but kind of a lot of work to get that started and to churn out daily content. So today we're going to keep it simple. If you've familiar with some of my work in the past, maybe this is redundant to you, but maybe you'll find this insightful. And if you do, then think about it at the end, just giving it a share. But we'll go through just my broad macro thesis, why I think Bitcoin is important, and then we'll dig into some of the kind of more the on-chain metrics and where we are in the cycle. Bitcoin's trading at 67,700 at the time of recording. I've done a lot of recordings and kind of a market analysis sort of videos with others in the past. This is kind of the first time I've done one myself. I've done a few Twitch recordings in the past. Maybe we'll live stream in the future. I would love some feedback from anyone that cares to listen. But let's dive in here. Okay. So first, let's start it off. Before we get into kind of some of the on-chain stuff, we're gonna talk about some kind of the macro, the big picture here. Why is Bitcoin important? Okay, so the big problem here, the elephant in the room is fiat currency is going to zero on a long time frame. It's trending to zero, and the units in the system are going to increase in perpetuity. There is nothing stopping this. It is a reality of the system itself. The purpose of a system is what it does, and fiat currency in the global financial economic system is producing more units forever. This is a fact, and if you don't understand this and wrap your head around it, you are going to be pillaged. Many people have been pillaged for decades, and the people that understand the game enrich themselves. This is the system. So what can you do? How do you think about it? How do you protect yourself? Well, if we go in a little bit deeper here, why is this time different, or why is this time more pressing? Because they've been printing money forever. What's stopping the system for persisting for another 100 years? Right? This is maybe the doomers, the hard money, the gold bugs, or the sound money advocates. Maybe they are just the modern day conspiracy theorists. Well, let me tell you why I think this time is a bit more precarious. So yes, the dollar has devalued by 99.9% in the last 100 years. But why is this time a bit different? Well, if we go back, before World War II, we were on a global gold standard. It was a little bit different in every system, but the dollar and every other kind of fiat currency in global trade was somewhat redeemable for gold. At the base level, you could go to your bank and exchange it for gold. And after bank run after bank run, after a massive financial bubble and the Great Depression, and the fact that gold was kind of the restrictor, the fact that there was this massive credit bubble that burst, the Great Depression comes. And there's this kind of deflationary spiral downward because, again, there was these massive financial bubbles and crazy amounts of leverage that couldn't be redeemed. There wasn't enough gold in the system. So they confiscated everybody's gold. Executive Order 6102 in the United States. And they immediately revalue the gold higher, meaning the real debt burdens. When they revalue gold higher after Executive Order 6102, where they confiscate your gold, that means that if you revalue gold 100% higher, that means that the values of the debt in hard money terms is devalued by 50%, right? So they revalue the debt burdens lower. I wish my public debt to GDP chart in front of me here showed World War II, but we are at World War II levels of debt burdens, right? And so me personally, you call this conspiratorial. I do not find it actually coincidental that the global war and conflict breaks out when the world is up to its eyeballs in debt. And so the fact that we had COVID in 2020 was very convenient, but never mind that for now. World War II happens. The U.S. comes out as a victor, the Allies, but the European continent, Eurasia, is decimated. The United States is basically unscathed. We go up and we tell everyone, look, the world will use the dollar. Everybody else's currencies will be redeemable for the dollar in this system. It'll be pegged to the dollar, and the dollar will be pegged to gold. And so for 30 years, well, actually, first, let me not get ahead of myself. The 1940s was a period of massive financial repression. If you could see the debt to GDP chart from the 40s, you would see that, and then really, also the short-term interest rates as well as the inflation rates, you would see that there was a sustained period of inflation above interest rates. What does this mean? Meaning that the inflation was higher than the return you could get on your short-term or long-term capital. This means that your money was being devalued, debased, financial repression, right? So savers and creditors, people that lend money to the U.S. government or in general, were losing money to the debtors, right, and people that received that money. So debt to GDP was lowered, right? Fast forward to the 70s, and fast forward to the U.S. Interventionalists in Vietnam. We were running up a debt burden. Other countries start to demand their gold in repayment, and Nixon says basically no, right? This is a TLDR. This is a long story short here. Don't know how long this video will be, but post 70s, the U.S. we're on a free float fiat currency standard. The world is, right? Meaning there is no gold at the base layer. The U.S. defaulted. We told the French, hey, get off our shores. We're not giving you the gold you want. It's all in Fort Knox, and we're not giving it to you. This is the first time in world history that the entire economic system is on debt-based currencies. But, interestingly, this sort of system works when debt burdens are low, right? So we have this massive demographic boom, the baby boomers. We have this massive technological boom for the next, 4 or 5 decades, but they didn't know that at the time, right? And interest rates could be quite high in that environment, right? If you're looking at the U.S. 10-year yields, the 70s, the 80s, interest rates got up, short-term interest rates got up to 15, 16, 17, 18, 20%, right? This is Paul Volcker, right? The hawk, the inflation hawk. Comes in, jacks up the interest rates to combat the inflation that was partly caused by the oil crisis. Okay, for the next 40 years, what happens? The next 40 years, we saw basically lower and lower and lower and lower interest rates, right? We had credit build up in the system, and every time there was any sort of downturn or asset bubble bust or economic crises or just even a minor recession, it was met with lower interest rates. Alan Greenspan called this the Great Moderation, right? We could solve everything with a cheaper cost of capital. So in the U.S. particularly, but globally, anybody that had massive amounts of dollar liabilities or fiat liabilities was enriched, right? Real estate boomers with massive amounts of capital these days, they were just riding the wave of ever and ever lower cost of capital. So anybody that had short dollar positions, dollar liabilities, and long assets enriched themselves. Okay, great. So fast forward to 2020, we can really look at the financial crisis in 2008, which was we jacked interest rates, we lowered interest rates to zero, printed trillions of dollars, with no real exit plan, right? Maybe we could have saved the system after 2008 with a period of fiscal austerity and paying this down, but no, that's not actually how it works in this fiat system that's ever politicized, right? With the kind of the illusion of bipartisan politics. Really, it's a uniparty, right? And the only actual not goal, but the end result is more units of currency in the system, GDP number go up, stock market number go up, dollar fiat currency purchasing power number go down. So here we are, post-COVID, where we saw even greater than the 2008 crisis, orders of magnitudes, if you look across the planet, of stimulus, monetary and fiscal stimulus to combat this global economic shuddering that we saw with COVID. Tens of trillions of dollars printed, public debt to GDP in the U.S., but really everywhere, I'm just using the U.S. as a proxy, goes to record highs, right? And if you looked at what the IMF was saying, if you looked at what these macroeconomists were saying, they're saying, look, the only way to get out of this sovereign debt bubble, right? We've seen the tech bubble, we've seen real estate bubbles in the past, we've seen the housing bubble in the 2008. This is the everything bubble. The everything bubble is the result of sovereign debt being fundamentally mispriced, meaning the cost of capital is so low that if sovereign debt is the bubble, every asset is the bubble, right? So we have this once in a generation economic slowdown. Everybody's locked in their house. They print tens of trillions of dollars. The Fed says we have unlimited money, right? Stimmies getting handed out. What's the dollar worth? we have long bonds, right? The bond market, which was trading at 30-year U.S. yields were at 1% in 2020, right? This is the biggest mispricing of all time. $20 trillion of negative nominal yielding debt. All of a sudden, they realize, wow, this is actually fundamentally mispriced, and they're continuing to print, and bond market sells off like 30-40%. The greatest, I think, maybe actually 50% from its highs, from its intraday highs. This is the biggest bond market drawdown in history from 2020 to 2022, right? Long-term yields go from 1% to 4 or 5% and change, right? So we've seen this massive repricing, the cost of capital repriced. Stocks have a drawdown, Bitcoin gets killed. And now we're in this situation where, despite roughly 30% inflation from 2020 to today, 2024, the actual debt burdens haven't eroded at all, right? If you looked at what the IMF and these macroeconomists were saying, they said, look, we need, in order to erode or to unwind a sovereign debt bubble, we can't just pay it down. What you need is financial repression, similar to the 1940s playbook of sustained period of high inflation with low cost of capital. And so the Fed was asking for this. In 2020, they were saying we need inflation higher, right? This is actually what they were calling for, and they got it. But what they didn't, I think, in my opinion, what they didn't foresee was the political pushback, right? The Fed was the scapegoat of, what the heck, my groceries are so expensive. The right and the left was pointing at Jerome Powell saying, do something. So they raised interest rates, right? Inflation has decelerated, right? The cost of things haven't gone down, but the rate of change of the cost of things rising has decreased, right? So there's been a deceleration in the rise of prices, but prices are still rising. So now here we are, debt to GDP is still 120%. We're still in the territory where sovereigns default. What's the solution, right? Is this a red team, Republican, blue team, Democrat thing? How do we solve this? And in my opinion, there is no solution, and they're going to continue to print, right? We're at this point in time where interest on the U.S. debt is higher than defense spending for the first time in, I think, history. I should have this chart up, but so we're at the point where this is now feeding back on itself. This is compounding, right? Interest rates being raised to combat the inflation is actually accelerating this Ponzi that we know as this current fiat currency system, this economic system, and the debts are compounding upon themselves. So if we look here, we'll go to the next chart. Here we got global M2 year-over-year change, the dollar as relative to other fiat currencies year-over-year, and Bitcoin. And I'll get into the Bitcoin thesis. I'm sure I'm posting this on X or Twitter, so most of you follow me. I post about Bitcoin every day. You know where this is all headed. You know that I'm going to, obviously be bullish on Bitcoin. But if you're new here, welcome. If your friend shared this, or maybe I do post this on YouTube later. But if you're new here, here's why, and I'll explain Bitcoin a bit deeper, but here's, I think, maybe one of the most important charts in the world, right? So the top pane is showing the year-over-year change in the global money supply. And this is looking at dollars, but this is also looking at global fiat currency in dollar terms. So if Japan prints more units of yen, right, while that's not dollars, there's an exchange rate for dollars. So we can look at basically what's the dollar equivalent of that printing, right? And this is happening in every currency on the planet, that they're increasing the supply, right? And then with that, you can kind of see in the middle pane the rate of change of dollars relative to that currency. So generally, in this kind of dollar-based system that we're in, that we've been in since the Bretton Woods system, even though we're no longer on gold, the world's still on a dollar standard for the most part. When the dollar is increasing in strength, the world has a hard time. Credit's contracting, business is slowing down, and people are kind of running to safety. Paradoxically, even though the dollar and every other currency is devaluing over time, the dollar is a safe haven still in times of crisis, in times of global economic slowdown. And why is that? Well, essentially there's a massive short position on dollars, on every currency, but there's the most amount of dollar-denominated debt, which means that everyone's short dollars, right? It's this game of musical chairs, and sometimes the music temporarily stops. It never fully stops because they always meet this with more printing, with more easing, with more stimulus, with more credit expansion. But every once in a while, credit contracts. Every once in a while, we see a slowdown. So you can see the periods where the dollar supply in the top pane, in the green and red, contracts, the dollar is increasing in strength against these other fiats, right? And look at the bottom pane, right? Here we have Bitcoin. This kind of, people will say it's this esoteric sort of, Ponzi scheme, and it's this wild, irrational asset, it's animal spirits, but you can see it very well tracks the top two panes, global M2 supply, rate of change, and the dollar strength. When the dollar is the most strong, when the global M2 dollar supply, the synthetic dollar supply, right, all fiat currencies in dollar terms, is contracting, Bitcoin is sustaining an 80, 70, 80% drawdown, right, multiple times over. When the dollar is the weakest, when the annual rate of change of dollars of global M2 is increasing at the highest rate, Bitcoin's at new highs, right? So correlation, causation, this is a curious chart. Maybe we should look more into this. Just a nugget for you. Okay, so we're gonna go to we're gonna go to Glassnode here. Bear with me. Alrighty. Okay, so what is actually unfolding, right? So here is what and again, if you've followed my content, if you're familiar with some of this stuff, sorry for being repetitive. You can, just hop off this video. It's fine. But here's what I think is unfolding, right? Bitcoin, if you're looking at this thing in a linear chart, it never makes sense. It's irrational. It's going down 20%. What's causing the sell-off? What's causing the pump, right? Buyers and sellers, of course. But you need to zoom out. Everyone needs to zoom out, including myself. This is the monetization of a new decentralized store of value medium of exchange. What would it look like if a money arose from scratch, from zero, and turned into $1 trillion, a $10 trillion, $100 trillion asset? What would it look like, right? And you have to really, that's more maybe a philosophical question, and maybe this breaks your mental construct of like value being value being kind of like the political decree of a fiat currency, right? Is Bitcoin breaks that mental model. It's like, well, what if the government doesn't approve of this, right? So I understand it's hard to wrap your head around, right? But here, look at the chart I'm showing you. This Bitcoin's realized cap, right? So if you're familiar with financial assets, a market cap is just the circulating supply times the price. So if there's 10 shares of Apple stock and they're each trading at $2, the market cap is $20, okay? Right, so Bitcoin has about $19.5 million, 19.5 million Bitcoin of supply currently. There will only ever be 21 million. The current price is 67,000 and change. The market cap is like $1.4 trillion and change, right? I'm just throwing some estimates out there off the top of my head. What is the realized cap, right? So with Bitcoin, we have a transparent ledger that we can see all of the units of the system. So with realized cap, we can see every Bitcoin at the price it ever moved. So some Bitcoin were mined in 2010 and have never moved. They're lost, right? These coins are lost. They had zero value when they were mined. It was someone in their basement mining at their computer as an experiment. They lost the keys. They're gone forever. No one can get those Bitcoin anymore. So in this realized cap metric, they're worth zero. Great. So because of this, we can see with extreme transparency and clarity and precision, almost like the real market cap of Bitcoin. We're going to call this the realized cap, okay? So if you look on a log scale, right, starting at 40 million, right, it's now at 500 billion, okay? So this thing is going up. This is log scale, not linear, and there's almost no volatility downwards, right? There's a little bit of decrease every time. This is, when you see the decrease, this is the speculators at the top of the market that bought in, selling at a loss. And you can see that every single cycle, Bitcoin's actual market cap really overshoots the realized cap, right? Maybe you can think of it as a fair value of Bitcoin, and then the bear market crashes under it, right? Capitulation. And we do this over and over and over again, right? So when you see Bitcoin making new highs on a linear chart and it looks like a bubble and it's irrational and you're saying, shoot, I saw this in 2014 or 2017 or 2020 or 2022, 23, I'm too late. Bitcoin's at 67,000. It's not too late, because this is going to happen again and again and again. And I'm not telling you this to FOMO you in or to make you, to buy my bags. Again, I'm just a dude on the internet. This is a $1.4 trillion asset. The money you put in doesn't matter. No offense, right? Even if you have $1 million, if you have $10 million, $100 million, you're still somewhat irrelevant to this. right? This is happening whether you like it or not, or whether you participate or not. And I'm in the same boat. I'm irrelevant to all of this. This is happening. So if we look at the market cap to realized cap, right? If you look at the ratio of these two, the market cap and the realized cap, the valuing the same way you would value a stock is the market cap, right? The realized cap is unique to Bitcoin, and this is how we value it. So if we apply a ratio to this, and there's also a rolling z-score here, we can see this really clear trend of bubbles and booms and busts, right? And here we go, Bitcoin, right? This is, kind of the start of a new bubble. And so again, is it too late to buy the cycle? This is not what I'm saying, right? This will cool down on pullbacks, right? But we're doing this again and again and again, and a lot of people are missing what's happening, right? We have a massive problem. The biggest problem in the world is that there's a heat loss of your purchasing power, of your units of savings, of your units of labor, right? This is a massive problem. It's the biggest problem in the world. The total addressable market for this thing is $500 trillion. I'm not saying Bitcoin fixes this. That's my opinion. But there's a problem, right? The problem is you're going to work as a wage slave forever if you don't find something better to store your value in. I'm not saying it could be Bitcoin. You could buy stocks. You could gamble on commercial real estate. You could do whatever. You could find whatever investment opportunity. You could buy options on Robinhood. You could do whatever you think. But the fact of the matter is, the house you want to buy, the cheeseburger at McDonald's, the car you want, your mom's retirement is going to cost more in dollar terms or euro terms or yen terms forever. That's just a fact, right? If you don't believe me, that's okay. But the data is the data. So there needs to be a release mechanism here, right? Some people believe it's gold. Fine, right? But in my opinion, Bitcoin is this answer. So we're going to look at a different thing here. This is the market value to realized value extreme deviations, right? So we're looking at these kind of the deviations above kind of what you call the fair value over time of Bitcoin. Oh, sorry about the. Here we go. We're going to put it 2014. Okay. So we're just getting into the phase of Bitcoin in a raging bull market, right? Look at the red here. This is, one standard deviation above the mean. Okay. So is it too late? No, that's not what I'm saying. Look at where it was red last cycle. It was in 2017. It was the red, the one standard deviation above the mean hit at 1,000, right? All the way through 20,000, and it crashed to 3,000, right? It hit at 19,000, 20,000, went all the way to 60,000, right? So here we are, we're just in this red, right? Expect pullbacks, expect volatility. You're gonna have to, if you want to ride this thing, you're gonna have to eat 15, 20, 25, 30, 45, 50% drawdown, 60% drawdowns, maybe another 80% drawdown, and you have to be comfortable with that. So if you're not, you should reduce your position size and understand what you own, right? The best strategy is a simple dollar cost average. If you make a certain amount of money and you have excess savings, you shouldn't be saving that in a dollar. You shouldn't be saving that in a euro. You should be saving that in something that's going to increase in purchasing power over time. At the very least, something that's not going to steal from you. Fiat currencies are stealing from you. So this is, again, not to get too mathy, but here's what I'm talking about, right? When was the right time to sell Bitcoin? Here in this chart. Price drawdown from all-time high. When was the right time to sell? You could have sold at $18 and paid a bunch of taxes, and then in the same year bought at $2, right? And then you could have sold at $100 after a 50x, and then you could have bought at $85, right? And then you could have sold at 1,000, and you could have bought at 1,000 and sold at 200, right? Or you could have just bought and held and sat on it and done nothing, right? The best traders of the Bitcoin bull market for the last 15 years, ironically, were the people that were put in prison, that couldn't sell, right? Like if the fact that it's liquid 24/7, 365 does things to people's head, right? If people just treated this like a venture bet, bought it, and then they're just like, it wasn't marked to market every day, and it's like, okay, I'll look at the result in 5 years or 10 years, they would have been way more successful, right? Like, when was the right time to sell Bitcoin? Never, right? And I found Bitcoin in high school right here, right? $3,000, right? I wish I had a huge income back then. I didn't, right? And I bought here, and I bought here, and I bought literally every single day since then. When was the right time to sell? Never. Okay. So that's just an important thing to understand here, is that this trend is very, very, very obvious when you look at the data. It's, again, we can go into the macros, and we're in this tightening cycle, and it's an election year, and there's maybe a massive AI bubble forming, and there's irrationality happening in the broader crypto complex, right? Dog tokens and lottery gambling and whatever, right? Ignore all that. This is the signal. This is, in my opinion, again, there's not financial advice, you're being stolen from. The dollar is stealing from you, and this is never going to change, right? The red team's not going to save you. The blue team's not going to save you. You're not going to get out of this, right? And so it doesn't matter if they cancel student debt. It doesn't matter if you think Trump or Biden is the best, right? They're not going to change this reality. They're only going to accelerate it. Every time you see a new funding bill in Congress, funding foreign wars, or relieving debt, or giving money to this, or tax cuts, or, right? We're running deficits at a greater rate relative to our productivity in history outside of wartime. Meaning, this is peacetime. Maybe you consider it war, right? But the U.S. is not directly involved in war. We're only fighting two proxy wars in Israel and Ukraine, or Palestine and Ukraine. But outside of wartime, we've never ran deficits at this level, okay? Meaning, we are borrowing money we don't have. The debt is going to continue to accelerate and compound because of this interest burden. And your purchasing power on any dollar you make or save is going to continue to decay, okay? So Bitcoin, despite its volatility, which again you should ignore, is, in my opinion, the engineering solution. We have an engineering solution to this problem. There's a 21 million hard cap, it's absolutely scarce, and there's a real world tie to this asset. There's a real world tie in the form of proof of work mining and the difficulty adjustment, and I'll show you what I mean. Okay, what is mining difficulty, right? For every unit of Bitcoin compute or Bitcoin hash rate, meaning computers that turn on and just to mine Bitcoin. You used to be able to mine Bitcoin on this laptop I'm recording on, right? Basic laptop. Now it's not profitable for me to do that, right? You used to be able to mine on GPUs, right? Now it's not profitable to do that. There's purpose-built Bitcoin miners, right? So Bitcoin 69,000, right? When was the first time it was, or 67,000? What was the hash rate when Bitcoin was 67,000 the first time? 164 exahash. What's it now? 600 exahash, right? Okay, so a 4x, 4 times the amount of compute to mine Bitcoin, which means what? This means that it's 4 times more difficult. And again, there's newer machines coming online. There's a lot of components to this and variables. I'm just making this very simple, right? I know that I'm kind of glazing over a lot of the details here, but just for simplicity's sake, this is my first video. I'm hoping to reach a kind of a wide audience with these Bitcoiners, hardcore Bitcoiners, as well as maybe some new entrants and new interested people that want to kind of learn what's happening here. So when the hash rate goes up 4 times, that means mining difficulty goes up 4 times as well. Because if hash rate doubles, right, mining difficulty is going to double, right? Every 2 weeks, mining difficulty tracks what the latest hash rate is. Meaning what? Meaning it's 4 times per unit of compute, right? It's 4 times more intensive, more challenging to mine Bitcoin, to mine a Bitcoin block, than it was at the same time, at the same price 3 years ago. Meaning that if you think about Bitcoin as like a commodity, which it is, it's a digital synthetic commodity, that means that it's 4 times more challenging to mine a Bitcoin block, right? So this means that the production cost of Bitcoin, and again, it's not uniform. I'm glazing over a lot of the details here. There's been new, more efficient rigs coming in, right? Moore's law. If you look up Moore's law, semiconductor efficiency has basically doubled every 2 years for the last 4 decades or so. So Bitcoin is very much riding that wave. But that's the genius of this. The difficulty adjustment means that there's not, if Bitcoin could just be mined by increasingly more efficient computers and there was no hard cap, imagine what would happen. there would be an infinite exponential amount of new Bitcoin supply, and the units would be devalued to nothing. But with the mining difficulty adjustment, what you have happen is the more and more computing power that's thrown at this network, all it does is just strengthen it and make it harder and harder and more challenging to mine and more secure. So Bitcoin has never been harder to produce, meaning that its production cost per Bitcoin has never been higher. This is the genius of Bitcoin, right? Last thing here, and then I'll wrap it up. I'm not even sure how long I've been going here. In about a month, we have what's called the halving. So what is the halving? Well, every 4 years, technically every 2010 blocks, every 210,000 blocks, there is a Bitcoin halving, meaning that the new issuance of Bitcoin gets cut in half. So currently there's 900 Bitcoin per day, approximately, of new issuance into the system, right? That's currently. In next month or so, approximately, it's estimated to be on April 20th, funny enough, this would be cut in half to 450 Bitcoin per day, right? You can see the previous halvings. So not only is Bitcoin becoming harder and harder to produce, but the new units into the system is getting cut in half every 4 years forever, right? Until there's no new issued Bitcoin, until 21 million Bitcoin have been issued. So this is going to happen again and again and again, right? It's unlike gold, it's unlike silver, it's unlike oil, it's unlike any currency we have. This supply ocean is predetermined. It's not political, it's programmatic. It's an algorithm, it's computer code, it's software. And if you want to change the code, you're welcome to. But nobody's going to run that. It's like, great, you're also welcome to change the rules of chess. But no one's going to play that version of chess with you. You're just going to be playing alone, right? And everybody in the world is going to recognize the rules of chess as they've been, right? So that's kind of the analogy I like to make. And just to kind of hammer the point home, let's look up circulating supply just so I can show you. This is a supply of new Bitcoin. This is a supply of Bitcoin, right? Look at asymptotic supply curve, right? We'll go linear terms. See the new supply of Bitcoin, right? It's flattening out. It's going to reach 21 million in about 100 years. But by 10 years from now, 99% of the supply approximately will be issued, right? So this thing's absolutely scarce. There's no more printing it. There's no bailout. There's no way to change this. This is, in my opinion, the biggest idea of our time. The biggest total addressable market in the world is money. And the money now currently is broken. And a lot of the societal woes and the bipartisan politics and the wealth gap and the tensions that have arisen because of this wealth gap. The haves, the have-nots, right? The elite class, if you will. It's because of the money printer, right? And so, again, Bitcoin's not going to fix everything in the world, but it does level the playing field. If you opt into the Bitcoin system, yes, there's exchange rate volatility, of course there is, but it ensures that you do not get stolen from by the political class, regardless of your beliefs, regardless of your vision for the world. You're getting stolen from, and Bitcoin fixes this. So I think that's where I'll wrap it up here. I don't know how long I've been going, but we'll call this episode 1. I'm just going to post this on Twitter or X. Please share if you've enjoyed this. Retweet, share, whatever you think. I'll probably start a YouTube, and I'll probably start a Twitch and other platforms and start maybe doing this live and be a little more interactive. And again, this is very much simple, right? I'm going over 21 million hard cap. What is hash rate, mining difficulty? What is the macro thesis? In the coming episodes, I'll make it much, I'll dive in more to the current market dynamics. I just wanted an episode 1 of kind of a primer of why I evangelize Bitcoin, why I talk about it so much, and why it's so important to me and important to the world. So thanks for tuning in. Again, we'll call this episode 1. And I know a lot of this for anyone that's tuned into the market, tuned into what I've posted in the past, or just kind of like basic Bitcoin dynamics, understands a lot of this stuff already. So nothing new. This is not some wild new revelation, far from it, but appreciate the fact that if you've gotten this far, you've stayed with me. So we'll talk again. Appreciate everybody. Thanks. And cut.